Hello, everybody. This is Alan Wang with the Alan Wang Realty Group at Keller Williams, Santa Clara Valley, here in the Silicon Valley, California. Here we have the May 2022 Silicon Valley real estate update that I'm really excited to talk to you about. The market correction has arrived. For those of you that know, the last couple of years have been very hot for sellers. The market's been insane every week, multiple offers, going over list price. I'm here to tell you that all of that activity has slowed down at this moment in the Silicon Valley. And I'm going to share my screen with you here as we go through here. All right. Well, let's talk about the state of the market. Literally, we noticed a trend in and about March that we started seeing fewer and fewer offers coming in. If you remember from the last blog that I wrote and also video that I filmed. Now, as what we have noticed in the month of April, it seems that prices have peaked in April. And now that May has come along, the last 4 to 6 weeks, we've been seeing a completely different market than what we have seen previously. So number one, if you see offers on homes for sale, they are much lower quantity, if any offers at all, unless it's been underpriced grossly and still a beautiful home. And so that's definitely happening right now on the sell side. Homes with good locations, schools, maybe really good condition, et cetera. Those homes will still sell. But again, maybe 1 or 2, maybe 3 offers generally are what you're seeing, not the 10, 15, 20, 30 that we have seen before. Homes are sitting on the market longer. Previously, 7 days or to 10 days, the home will be sold. Now we're seeing 14, 19, 20, and that clock continues to tick. And what is interesting, of course, this is an opportunity for buyers as a seller, still not horrible, but we'll talk a little bit more about that. What is going on? Number one, of course, inflation is a big issue across the board. And that's what the Federal Reserve and our government wants to get under control right away. You're feeling it at the pump, at the gas pump. You're feeling it with your groceries. You're feeling it when you eat out or you have a beverage. Everything has gotten more expensive. The used car market's going insane. Trying to get a vehicle is very difficult. The prices have skyrocketed due to COVID and the lack of inventory on multiple fronts. The other issue is rising interest rates. The government is countering inflation with rising interest rates, and they have been aggressively increasing rates. The last rates that were quoted were in the upper 4% for a 30-year fixed to even over 5% in some places around the nation. That's a big jump in interest rates, and that is directly targeted towards real estate and any other products to try to calm down buying demand and bring prices down. Right now, there's just too much demand, not enough supply of products. The stock markets are down extremely right now. Those of you in Silicon Valley know this is very important towards our down payments. And there's a recession looming as well. And that's something that is a concern on a lot of buyers' minds at this moment in time. Let's talk about inflation. The last data that we had in April was that inflation was at 8.3%. The only good news I have for you is that it wasn't at 8.5%, which was, this is still pretty much a record high. Okay, it dropped 0.2%. Still, inflation is very high. And that's some remnants of COVID. The war in Ukraine has caused a strain on supply and demand as well across the nation. This is the issue that our government wants to get under control. Interest rates, as I mentioned in the beginning of the year, rates were at 2.875 to 3% for a 30-year fixed mortgage. And now we are at 5%. And that is an extremely big jump for a lot of folks as far as affordability of houses. And it gets worse, more rates are coming. And so, yet I do want to take a step back, and you'll still hear, if you look here, okay, fine, we missed the bottom, but we're still at record low rates. And I think sometimes that payment shock has gotten people a little bit just kind of taken aback. Nobody likes change. But however, if you look and you talk to your parents back in when they were buying homes at 18%, 5% still not a bad rate in the big picture. So that's something that you need to think about is in the big picture, this is not bad. ARMs are popular again. ARMs, what's an ARM? Adjustable rate mortgages. And so you may be able to get an adjustable rate mortgage, which is locked for 5 years or 7 years, about 1% off what you would typically get a 30-year fixed mortgage for. Something to look into if you're not planning to be in your home a long time, or you expect rates to come down eventually in the next 5 to 7 years. That could be a bet that you choose to make as well. The NASDAQ, this is the crux of one of the major pillars of home buying in the Silicon Valley. In 2021, the stock market went up 23%. In 2022, we were at about a 28% drop. So if you do the math, that's a net 5% loss for most folks. When they thought they were flying high at 23% last year, a lot of wealth created, it dropped to 28%, which means we're negative 5% net from last year overall. And this is especially hurting the NASDAQ and the tech sector. And this is going to affect the down payments of our home buyers in Silicon Valley. So you shouldn't be confused, right? I mean, this is the reason why things are slowing down a little bit, because buyers are getting hit on two different places, monthly payments as well as their down payments. Now, there's good news. The unemployment rate went from the COVID peak of 16% and dropped down to 4.6%. That's good news. As you can tell, everyone's hiring. They're paying very high salaries to get folks to work at the restaurant business. There's slow wait times. Folks are waiting. They're looking for labor, and a lot of the labor force chose not to work anymore during the pandemic. And so we have a shortage of labor. And so that's not the issue here. However, it is causing prices to go up on hourly rates or salaries to go up as well, because folks are having a tough time finding workers as well. So again, inflation is hitting on multiple fronts. This is an interesting chart I put together to try to illustrate what is going on here. To the left side here, you have a typical home price of $1 million, $2 million, $3 million, or $4 million. On the left side here, this is what everything looked like last year, where the rate, say 2.875% on a 30-year fixed, a 20% down payment equated to these numbers. And this was the monthly mortgage rate based upon a 2.875% interest rate last year in 2021. Now, we've made some assumptions in this model. We're assuming that 100% of the down payment comes from the NASDAQ, which I know is not true, but that's something just for the sake of the model we're assuming. And also the monthly payment does not include your property tax or your insurance, or HOA or anything else other than your mortgage, just to simplify the situation, the model for you to understand. On the right here in 2022, this is where we see a 2.125% increase in interest rate from 2.875 to 5%. And subsequently, the 2022 20% down payment from our NASDAQ stock, again, assuming 100%, so 28% drop, and see what happens. Originally, the buyer who was looking to buy a $1 million house with a $200,000 down payment suddenly has $56,000 less to down pay into their property. And that's an issue, affordability issue, because most banks prefer for a buyer to have 20% down before they buy a property. And on the other side, the interest rate has gone up to 5%. And so that monthly payment here on a $1 million house has increased to $976 a month, $11,000, almost $12,000 a year for this particular buyer. And a lot of buyers are pushing their limits already. Let's talk about 20%. So, sorry, $2 million. You got 20% down at $400K, $66.38 for your monthly payment. Well, again, this buyer has lost $112,000 in stock value, and their monthly payment has gone up by almost $2,000, a total increase of $23,000 for the year. That's not good. If you're a buyer trying to buy, this is going to affect your ability to purchase home. A $3 million buyer, again, $600K, about $10,000 a month, original now is down $168,000 to $432K, and they're increased their monthly payment by almost $3,000, $35K a year. I mean, this is payment shock. This is shocking our buyers to go, oh my gosh, what I thought I could do, I can't do anymore. A lot of buyers are going back, calling their lenders, maybe looking at adjustable rate mortgages if they really need to buy right now. And this is shocking. I mean, forget the numbers. I mean, the emotional perspective, nobody wants to suddenly feel like they're 28% less in their equity, in their down payment or their net worth. And nobody wants to see an increase of this magnitude of payments per month. And so let's look at the 4 million range. If you're looking at 4 million range, that's $800,000 down. You're suddenly down $224,000. And your monthly payment shot up about $4,000 a month to $47,000 a year. I mean, this is an enormous burden on a lot of families. And so it's no wonder that a lot of our buyers, even they want to buy, they originally were trying 4 million. Now this down payment is dragging their affordability down. And so buyers have good reason they might still be eyeing that $4 million home, but now they can only afford 3.5. And so they're writing 3.5 because they're stuck, right? Their down payments are lower, their monthly payments are higher, and that's what they can afford. I'm not an economist here, but I have a stinking hunch that this is what the Federal Reserve has been wanting to do by design, because they know that by raising the rates, now the stock market not directly correlated to them, the Federal Reserve per se, but these two factors, as I've been saying in all of my blogs, these two factors, if any of them change or go down, then the real estate market is going to hit some leveling and possibly adjusting downward on that front. Some projections at a macroeconomic level, prices are leveling, and that's what they're trying to do. The Federal Reserve is trying to level prices at least at this very moment, and hopefully bring down inflation, bring down the cost of goods. That's what they're trying to do. Now, there is still low inventory. Inventory is still very low in the Silicon Valley in general. That's been there. Demand's been high. That's what's been causing this bidding war that's been going on for the last couple of years. But we need to monitor the rate increases. If they keep raising rates, that scenario that we just showed you is going to keep increasing in magnitude, and buyers are going to feel the pinch in buying a property. We also need to monitor NASDAQ. Hopefully things rebound a little bit at the least to recoup some of the gains that buyers had last year, because regardless of the numbers, buyers are not in the mood when they're feeling that their portfolio is down 28%, when they were originally up 23% about just 5-6 months ago. That is just, they're not going to be in the mood to buy houses because they feel that their net worth has dropped by a significant amount. We're likely heading into a recession. The government is not going to say that. They need 2 quarters of negative GDP before they'll tell you that we're in a recession. So they're not going to say anything until that actually happens, but we can see that it is coming. Now, what advice do we have for you? As sellers, the peak has come and gone. I'm sorry, there's no other way to say it. The peak has come and gone. However, coming off peak is still not bad. It's not a bad place to be. We're coming off peak. Wouldn't be bad to grab a good price on the way down here before things, hopefully things don't get any worse, but we don't have a crystal ball on that front. As a seller, it's been hard. You've been hearing for 2 years, I'm going to put my house on the market. I'm going to list it 10% under. I'm going to get 10 offers. I'm going to sit for 7 days in our market. It's going to sell at some new record price in my neighborhood. And that's what's been going on. That is not happening anymore. We need to taper our expectations on our price. The price that you see now, right now, this very moment in time, the last April price, that was a peak price. So right now the market's still adjusting. It's kind of a dead zone right now where sellers are still here and buyers are here, and we're trying to find a new equilibrium that the market's trying to settle at. And it's going to be a tough place. If you need to sell, you need to sell. Catching off peak may not be the worst thing. Right now, April was the peak. So perhaps we might be grabbing January, December prices. Still not bad. Home prices are up enormously. And so you're still doing very well on your asset. But remember, you're going to be catching a price that's no longer the peak price in April. And it's changing very quickly. Days on market's going up. We're seeing a lot less offers. If even one, maybe 2, but most of the time, barely 1. And it's taking more than a week to get there. Buyers are not in a hurry anymore. They're scared, they're nervous. And so they're taking their time. They're not rushing to get you an offer in the first week. And so you may be waiting 2 weeks, 3 weeks, possibly even a month. And now in the grand scheme of things, this is very normal, actually. Most houses are not supposed to sell in 1 week. That's not normal. And not supposed to be selling with 10, 15 offers, not supposed to be selling hundreds or $1 million over list price. None of that was ever normal nor sustainable. We're now heading into perhaps a more balanced market, and things are changing very quickly. So remember, but sellers, remember, you only need one good offer. I know we've gotten used to the market and multiple offers. This is exciting. The news is great. But at the same time, we could, even with those 15, 20 offers, we could only take one of them. And it's the same situation. We're now playing for that one offer. And so make sure you talk to your realtor about this right strategy for your property. You can't go in with a strategy that might really shoot you in the foot later on. Buyers, question I'm getting, is it a good time to buy? It is always a good time to buy, especially if you're looking to buy an asset and hold it for the long run for the next 7, 10 years. We never know when the bottom is. By the time you see the bottom, kind of like the sellers with the peak, by the time you know the peak was there, you missed it. And so by the time we know that we're at the bottom, you've missed it. And so if your family needs a home now, you've been tired out there competing, might be a good time to come in and see if you grab some deals and to get some properties back at prices from maybe December or January and come off that peak. Now, beyond that, you can project. Likely things are leveling and perhaps adjusting likely for the rest of the year. I don't have a crystal ball, but perhaps there's a little bit more room there. But again, once the bottom comes, I know it when you do, and things will turn up from there. So you're never going to catch the bottom. And if you're in it for a long run, you'll be fine. This is the time when I'm going to tell you buyers, don't follow the herd. For the last 2 years, buyers have been just following the herd. My friend bought, oh, this friend bought, so I'm going to buy. I'm going to jump in. I'm just going to make this bidding war worse. Well, people never made money just following the crowd, right? You're now coming off peak, and are you brave enough to jump in and buy it when everyone else is afraid? That's when you get the deals. That's when you're not bidding hundreds of thousands of dollars over list price. This is when you might be able to keep some of your contingencies intact, have a little bit more time to do some inspections. This is your time as a buyer, and take advantage. We don't know how long this is going to last for you. If you have any questions, of course, reach out. I'm Alan Wang with Alan Wang Realty Group. We have a great team available to speak with you. You can call us at 408-313-4352 or email us at alan@alanwangrealty.com. Send us a direct message on our LinkedIn, Facebook, Instagram, Twitter. I'm always monitoring all channels. We're here for your needs. I will tell you that things are changing, but things are not horrible. There's still real estate to be had. The market's getting a little bit more balanced, which I like. That's actually a market that is more normal to operate in. And we are here for your buy or sell needs. And if you have any questions, please reach out to us. Have an amazing day.